right, let's get into our panel here. The role of the investor community in commercial space opportunities continues to grow significantly. Annual early stage funding was nearly $6 billion in 2019. But of course, the COVID-19 pandemic has brought a pullback in investor appetite, particularly in some of the higher risk and highly competitive sectors. The leading capital market representatives we have here today will deliver valuable insight on the current state of in-space investment and how the investment landscape is expected to evolve over the coming year. Before we get our panel started, NASA Chief Economist and Program Executive for ISS National Lab, Dr. Alex McDonald, would like to share a few words with you. Alex, over to you.
Well, thanks there, and thanks mostly to our panelists here who are going to share their knowledge with us today. As we just mentioned, this is really an incredibly exciting time for private investment in space. It's really a boom time like we haven't really seen before. Most of these areas of investment that we're seeing, of course, are in areas like communication satellites and remote sensing satellites, launch vehicles. But increasingly, we're seeing companies that are both using the ISS National Lab as part of their business development process, as part of their product development processes. And we're also seeing people and companies that are working to utilize microgravity to create products that we've actually never seen before. These are really two exciting new trends. And I'm really looking forward to hearing what the panel has to say about the process of private capital being engaged with payloads that go to the space station, with private capital being engaged with companies that are pursuing unique in-space products. Before we get to the panel, I just want to highlight a few here that I'm really excited about and have been excited about. The National Lab works a lot with other government agencies. One of the primary purposes of the National Lab is to fly payloads that have been funded by organizations like the NSF and the NIH. And the NIH actually funded Emulate, which was part of their Organ on a Chip technology program. And since they've received their National Lab Flight Award, that company has raised over $100 million in additional funding. So that's a real strong sign that National Lab flights are really supporting new company growth. Another one was even more directly supported by the National Lab. And this was a company that was funded initially through the Mass Challenge project. Mass Challenge being the National Lab's partnership with Boeing to help accelerate early stage companies. And this was a company called Launchpad Medical. And they had a type of injectable bone adhesive. And since they've received their award, they've raised over an additional $18 million. And they're anticipating beginning human trials next year, all thanks to the National Lab ecosystem. Two more that I think are relatively important to take note of from the context of private sector investment. Even though I mentioned that most of what the National Lab does is really focused on taking advantage of the unique process of microgravity, the National Lab also allows for technology demonstrations that simply make use of the facility overall. And the facilities that include our cargo vehicles. And one of these was actually Link, which is a telecommunications startup company. And they were able to do a tech demo using the commercial slingshot facility that is accessible via the National Lab. And they were establishing the ability to do two-way communication to standard cell phones from space. And based on the tech demo flown through the National Lab, they were able to do a $12 million raise for their technology. So again, really exciting opportunities across the landscape for investment. And of course, particularly important, and I'll finish on this note, we've actually now seen an exit from one of the companies that really got their start through the ISS. This, of course, being Made in Space. Made in Space became very well known for having demonstrated 3D printing on board the ISS, flew a number of tech demo payloads through the ISS National Lab, and were recently acquired by the company Redwire. So, if you went back 10 years ago to the start of the National Lab, none of these projects were really seeing this type of private investment. And so it's a real strong sign that actually flying in space, flying in the National Lab is really an important accelerant. Now, there's a lot of challenges still to go. There's a lot of challenges in terms of flight rates, a lot of challenges in terms of fidelity of the data and the frequency of the data we can get back. And so I'm really looking forward to hearing what our panelists have to say about the opportunities going forward, specifically related to in-space production and other commercial opportunities on the ISS, and particularly those enabled by the National Lab. So With that, just thanks to everyone who's doing work out there on this, and thanks for panelists for sharing their insights today.
Excellent. Thanks, Alex. So yeah, let's just get into this panel. So I'll introduce our moderator, Bob McCooey. Bob McCooey is the Global Head of Capital Markets and Senior Vice President of NASDAQ's Listing Services. In that role, Bob leads the business development for the new listings in Latin America and Asia Pacific, and he's a relationships manager with companies throughout their corporate life cycle. He also works closely with premier financial sponsors globally to optimize and integrate interactions across NASDAQ's corporate services teams, ensuring long-term partnerships. So with that, Bob, over to you.
Thanks, Jim. You've made me feel very important right now, so thank you very much. I appreciate it. And the world is very different from where we were a year ago. It took us to ring the opening bell with 3 NASA astronauts in space in order for me to be invited back to moderate the panel this year. So I wonder what I'll have to do in order to get asked to come back next year. We do have a fantastic panel of experts who have joined me today, and rather than trying to do them justice, I'm going to let them introduce themselves, but I would also like them to talk a little bit about their role in their firms and their firm's focus in order to really set the stage for our discussion this afternoon. And I'd love to begin with Anne.
Great, thank you, Bob. So hi, everybody. My name's Anne Kim. I am a managing director and sector head of our frontier technology practice at Silicon Valley Bank. Now, our bank specializes in working with technology companies, mostly venture-backed, and our frontier technology group focuses on a lot of the technologies, including aerospace, aviation, a lot of the capital-intensive hardware companies that you've seen getting funded to date. So I cover companies from the Series A round all the way to about 100 million in revenue. And we've had a lot of activity in this space economy. We can date back to Skybox imaging, going through a lot of the first wave of venture-backed space tech companies. And we can talk more later on in the presentation about which companies.
Great, thanks, Anne. Shaheen?
Hello?
There.
I somehow lost.
We got you.
You guys, okay, because I can't see you. Okay, great. Can you see me now?
Yeah. Better if you don't have to see me.
For some reason, my window was stuck on video. Okay, perfect. So hi guys. I'm Shaheen. I'm a partner at a capital firm called Lux. We've been around for 20 years and did over 150 companies over the course of 6 funds. We invest across healthcare and technology. So we've done everything from therapeutics and medical devices, surgical robotics, to grid infrastructure, healthcare services, healthcare IT, 3D printing, 3D scanning. I have a semiconductor background. I joined the firm 14 years ago. I've led our chip investments and investments in rockets, satellites, driverless cars, and a lot in kind of robotics and automation broadly. And it's on the West Coast. We're a team of 9 investment professionals between New York and Menlo Park.
Great, thanks, Shaheen.
Thanks, Bob. Can you hear me okay?
Yes.
Hi, guys. So my name is Alex Van Hoek. I work at Apollo Global Management, which is one of the largest private equity firms and alternative asset managers in the world. We have over 400 billion of our investors' assets under management as of our most recent quarter. More specifically, I'm a partner in our private equity business. I've been at Apollo just over 10 years, based in New York, and I have responsibility for our investing activities in aerospace, defense, and space and satellites, among a couple other industries as well. Apollo has a long history in the sector, predating even my time here, mostly on the space communication side. We used to own Intelsat, Hughes. We were an early investor in Sirius Radio, among others. And in terms of my personal background, I was actually mechanical and aerospace engineer by undergraduate training, and have a strong personal interest in the sector. So it's great to be with you all today.
Good. Glad you mentioned that, your creds in that area, because I was going to mention it if you didn't. That you've been involved in this for a long period of time. And wrapping up our panelists with Chad.
Hey, thanks, Bob. So I'm Chad Anderson. I'm a founder and managing partner at Space Capital. We're an early stage venture capital fund focused on investments in the space economy. We lead rounds in founders who are leveraging space technology. Really, we view the sector as a lot more than just rockets and satellites. So the types of companies that we're backing are really focused on three key areas for us: GPS, geospatial intelligence, and communications. We're actively investing out of our second fund, and we manage 40 million in assets. We got 30 companies, a little over 30 companies in those two funds. We invest globally, so 2/3 of our fund is in North America, and the other third is invested in other geographies, primarily Europe. And I also serve on a number of boards, including the UK's Space Catapult, where I support the national strategy to grow the space economy in that country. And prior to space, I've been an entrepreneur in a past life and also managed a $50 billion real estate portfolio at JPMorgan Chase through the Great Recession in 2008 to 2012. So this is not my first rodeo. And yeah, it's great to be here, and thanks for having me.
Thanks, Chad. Good to have you back again. You and I are the only holdovers from last year. Yeah, we'd have to have another hour to talk about managing a portfolio like that through the Great Recession. But I want for all those who are watching to know that there's a Q&A opportunity for all of you. We're not going to just wait till the very end. So if you have questions during our time together, please just send them through, and we will curate them and ask our panelists. I have a number of questions to tee up our discussion this afternoon, but certainly want to hear from all of you that are watching to make sure that we're addressing the things that you're most interested in this afternoon. So just to get started, as Alex and McDonald and Jim Way said earlier, we're in a very different place than we were a year ago. 2019 was kind of a record-breaking year for emerging space technology sector investments, but we're all now 6 months at home or in quarantine, and the world's very different than when we were all together in July of 2019. So I'd love to hear the panelists' views on, what does space investment look like from your perspective today? And why don't I just continue with you, Chad?
Yeah, sure. So a lot's going on, and it's all pretty recent. I mean, you've got Alex on who can talk about, the things have been happening in space for quite a while, but over the last 10 years, they're much, much different. On the infrastructure side of the house, SpaceX, when they started launching, they really removed the barriers to entry, as we all know. They reduced the cost and brought transparency to an opaque market. So opened it wide up for entrepreneurship and innovation, a wave of it, which we've seen over the last, I'd say 6-7 years, when we started to see the first, new infrastructure companies start to take advantage of that increased access with the likes of Planet and some other small satellite companies, that were changing the way that we collected and brought data down from space. So on the infrastructure side, things have been happening really, really quickly. On the GPS side, location-based services has really hit its stride over the last 10 years, and so you kind of take that for granted. It feels like it's been part of our lives forever. Space data has become an increasingly important part of our everyday lives. GPS is a incredible success story that's generated, trillions of dollars in economic value and some of the largest venture outcomes in history. We wrote a report with Ann Kim's team at Silicon Valley Bank called the GPS Playbook, which really, shows us how space-based technologies will create new investment opportunities. And I mean, it's all coming out in the wash. I mean, last year was a record year, and I gotta say, we've got early Q3 numbers coming in, and it looks like this year is going to be even bigger. So there's a ton of momentum right now, and there's really just no signs of slowing. That's on the infrastructure side, distribution, or on the application front.
So, Shaheen, Chad brought up one of your portfolio companies, so probably best to go to you next since he dropped Planet in there. Are you seeing the same thing?
So I think that there was a lot of novelty associated with the earlier companies that we saw back in the 2010, 2011 timeframe. Back then there was only Skybox and SpaceX that were, privately backed space companies that had raised meaningful money. And when I met the Planet team early on, it wasn't just another imaging company that made it interesting. It was the team's ability to identify new market opportunities that made it very interesting. So customers that otherwise did not have access to Earth imaging were the early customers that they were talking to. And when they got the first 2 images from the first Dove satellites and put those in front of customers that, again, were not traditional geospatial imaging customers, got us very interested. And so, technology by nature is an equalizer. And if people do their jobs and build great technology, the expectation is that whatever they offer will be commoditized. And so there really isn't a business unless that technology can create some kind of a unfair advantage for a business as the basis of the business. And that's the challenge that we're seeing now with the new, I would say, batch of space companies where it's, better synthetic aperture radar, better Earth observation, better GPS. The question becomes, okay, well, how do you create an Apple or Qualcomm or Broadcom-like kind of moat or Intel-like tax where you can command a high margin that grows over time in a market that's growing as well? That's where the nuance comes in. And that's where our jobs, as analysts here, as investors come in, which is help these companies that have these great assets identify those opportunities where they can truly build multi-billion-dollar companies.
Understood. Alex, how is it on the, you're putting a lot of dollars to work in your portfolio. How are you finding it this year versus last and over the past few years?
Yeah, so I think it's generally, 2020 has been a fascinating time to invest. There's clearly been a huge amount of disruption across, most industries, including this industry, that's been caused by the pandemic. Disruption like this, I think it obviously creates risks, but it also, creates some interesting investing opportunities as well. I think to build on a couple of the things that Chad had said earlier, what you're seeing in 2020 is a lot of the macro trends that have driven kind of the scale of this sector over the past few years. Those continue in terms of, access and cost of launch becoming more accessible, the availability of technology, the cost of components coming down, for hardware applications. I think you're seeing more and more, national security and defense-oriented government spending coming into the sector, which is good. And I think all of those things will continue, which is a nice tailwind for the sector. I think 2020 specifically, though, you've seen a couple other things, overlaid on top of that, which has made it particularly interesting. I think the pandemic has accelerated, certain trends, and I'll take as an example, kind of in the communications infrastructure part of the market. You've seen, resellers of satellite capacity, particularly ones that cater to aerospace and the cruise industry. You've seen, some of them go through bankruptcy, which is, I think, accelerating a consolidation that needed to happen. So that's been very interesting to see, and that's still ongoing. And the other thing I'd say is, at least publicly, and in terms of policy support, I think you see I think a broader acceptance of the important role that government can play in supporting and supporting innovation. So, for example, I think the success of the SpaceX Demo 2 mission, which is like your poster child of of a government providing support to the to the private space sector, I think did a lot for driving this this sector forward in a very public way. So it's an interesting investing environment generally, but I think particularly true for investing in space.
Yeah, I definitely want to dig more into the public-private partnerships and the government role. But just to close out, year versus this, and someone who sees it across a number of different funds, and I'd love to hear your perspectives on this year and the investment dollars that are going in and how your clients are thinking about it.
Yeah. It's a great question. And SVB sits in a unique spot because we work directly with the companies and entrepreneurs. We work directly with the VC funds. And we also work with the later stage private equity firms and LPs. So there's constantly the question of, space is taking off. How do I get involved? Some people are slower to react than others. Right now, a lot of the household names, the VC firms, have all hired partners to at least have some familiarity with the growing space economy. And now a lot of the LPs who invest in the VC funds are also asking us, are the opportunities so large that we can go in and invest directly ourselves? That way they'll be able to push bigger amounts of capital into this space. And also there's been a lot of bets already made on the small launch, the satellites. So to Chad's point, when he mentioned earlier that connectivity, GPS, and geospatial intelligence is really big, I'd have to agree. There's so many funds right now from Europe, from Asia that are pinging us, asking us how to think about the market, but they're really focused on that application layer. So there's been a ton of inbound interest on continuing to put funding into this space.
So, Alex, if I go right back to you off of Anne's comments, when you started 10 years ago at Apollo, I don't know if you were doing space investing at the time. What did your partners think when you originally walked in there and said, we want to do space investing? And then what did your LPs think when you started to make bigger bets on it?
Yeah, well, so I think Apollo has a long history in the sector. And so, when I joined the firm 10 years ago, we were already, an very established player in the sector. And I think we had realized that, that there were and there still are, certain parts of the market that are very well suited to private equity investing. And, I can maybe spend a minute just describing what those types of investments are. But I think because we've had success, success begets success. And I think it also increases the acceptance, amongst our partnership that this is an attractive, sector to invest in. So we benefit from the fact that, we've been investing in this sector since the 1990s. But what I would say is, as you think about, someone like an Apollo or a private equity fund and where we fit in terms of the funding environment, we're obviously much larger, but our cost of capital, is considerably lower than a VC firm that Chad and Shaheen work at. And the reason for that is we tend to invest in kind of companies that are lower on the risk spectrum. So our cost of capital is kind of commensurate with the risk we're taking. We're generally, control-oriented investors. We're buying the whole company. Our businesses tend to be more mature, and then we own them for a finite period before, we need to return capital, to our investors. And so that's kind of consistent across all sectors. As we look at what makes sense for us, in the space sector historically and going forward, and what doesn't make sense for us. I think we're not great at making technology bets, for example. Those tend to be things that we're not, not that well equipped to underwrite and address. I think what we're better at is taking a company that's got some scale, providing capital to help it grow and scale and operationalize it, and then that ideally has positive cash flow, and then take the private ownership kind of approach that we can bring as a private equity fund and really create shareholder value that way. So, I think that's the approach we take, with every single company and every single industry, and including space.
Alex, could you maybe double click on the parameters that you're looking for? So you mentioned profitability, but as we all know, I think Bill Gurley says it best: revenue was created equal. So I'm curious to know, when you look deep into these companies, what nature I mean, a lot of these space companies have a bunch of contracts, and so I'm curious to know what kind of revenue excites you, what metrics or levers you're looking for to be able to move with the infusion of your capital. Maybe if you can double click on your requirements, that'll help the audience and myself actually as well.
Yeah, absolutely. That's a great question. And I think you said it perfectly, which is not all revenue and not all backlog is created equal. So you really, what we do when we think about backlog and the revenue trajectory of a potential investment for us, it's, we're looking through that backlog to who the underlying customers are and what's the nature of the contracts. So, a take or pay contract with a highly rated, very credit-worthy counterparty, whether it be, U.S. government, prime example, or, a large existing telecom company, whatever it might be, that is very easy to underwrite and understand risk. On the other end of the spectrum, if the backlog is comprised of, revenue from other startups that themselves have, very, very high, risk profile just by nature of them being, young companies that are unproven, that becomes harder for us to underwrite. And so for us, I think the absolute most foremost thing that we look at is, what's the revenue backlog, and then kind of looking through that, what's the quality of the customers, what's the quality of the contracts, and then from there we can, start to look at some of the other things that are important, like the cost structure, like the cash flow, like the team, the technology and the IP. But, it starts with revenue, because without that, it's hard for us to underwrite something that works for our cost of capital.
So Shaheen,
thank you.
Why don't I jump back to you? I know that in your portfolio you have about a half a dozen companies that are dedicated to space specifically. You mentioned about 150 companies that you've had in your portfolio. How do you think about allocation of capital to space? Do you just allocate it to different ideas that come in? Have you messaged to your LPs that you're going to dedicate a certain amount to this sector, or how do you think about it?
So what we've messaged to our LPs is that we are looking to fund amazing teams that are building special technology that could be the basis of multi-billion-dollar companies. We haven't messaged an allocation per se. We're investing out of $1 billion pool of capital. Half of that is dedicated to early stage. That can be seed, Series A, Series B. And the other half is dedicated to either entry point growth stage investments, or doubling down on our winners, the venture portfolio from the venture portion. And so we don't have a particular mandate to put a certain percentage, a certain number of companies into a particular sector. But if you look at the history of the funds, we have been pretty much balanced between healthcare and technology broadly. And there have been, to your point, quite a few space-related investments. Now, these related investments had different flavors. One of our earliest space-related investments was Chimeta, which is doing satellite antennas for terrestrial applications. And then a little bit later, we invested in Planet. We also invested in Astranis and Cape Analytics. and relativity space. And so we were never, at the time when we made these investments, we were never actively seeking space companies. It just so happened that we were introduced to a great team of entrepreneurs. So in the case of Planet, I was with Renee Resta from OATV, and she said that I know an amazing team of folks out of NASA, and they're doing some really interesting things. You should get to know them. And it wasn't a conversation about space or satellites or anything. It was a conversation about great entrepreneurs. And so looking into the future, there are, aspects of space that excite us, but we primarily want to be driven by the strength of the team and the scope of the idea and how differentiated it is and how uniquely it can go out and build a very attractive business that later, folks like Alex get excited about.
Great, and let me pull Chad back into this, since Space Angels is focused on space investing. So we've got a number of entrepreneurs, space entrepreneurs, who are on this this video today. They've got an amazing idea. Give them some advice, Chad, on approaching you and thinking about how they would present that idea. How would they get in touch with you? What would you think would be an interesting idea that you would even consider talking to someone about?
Yeah, and I'm going to build a little bit on what Shaheen said, because
I hope you do.
For us, it's like timing is everything in life, and it's really important to know where we're at and what opportunities are becoming available that weren't available before for whatever reason. So again, using the GPS, playbook. Government and military investment into some infrastructure that was really not intended for civilian use. A handful of marketplaces, if you will, distribution companies knew enough about those satellites to harness the signal and make it really easily accessible and available to the tech community. And the tech community got a hold of it. That's when we started to see the applications developed, thousands, tens of thousands of new companies popping up looking to make use of this really valuable signal that they didn't really have to know anything about space, right? They didn't have to know how the satellites work. All they had to know is if they tapped into this platform, they would get really valuable space-based lat-long data. The same sort of thing is happening in Earth observation right now. So decades of infrastructure investment by the government. Over the last 10 years, with increased access to space, we've seen a lot of new companies like Planet and others generating an unprecedented amount of new data. And that's really great, but it's all been bottlenecked. Again, it hasn't gotten into the hands of the tech community to make use of it. And it's because they've set up their companies to be really, they've been really siloed and focused on a really sophisticated government customer. So, we've got one of the gems in our current portfolio is addressing that distribution issue. And so in our earlier SPV fund, we were really focused on, the Space Angels fund was really focused more on infrastructure, because that's what was available at the time when we set that fund up. Now, our first institutional fund, Space Capital One, was really focused on the distribution of this space-based infrastructure data. And so one of these companies, this marketplace that sits here, is called Skywatch, and they're bringing all of that data onto their platform and making it really easily accessible through an API, doing all the unsexy work in the background for the same reason. And the companies, we're just starting to see the companies build on top of this API. And they're focused on the customers that they know really well in these huge industry verticals like agriculture, insurance, maritime shipping, logistics. And so we're just starting to see the geospatial intelligence application space really open up. And so this is all blue sky stuff. So this is something, we're about to close our next fund. And I think that our next fund is going to be really focused on this area in the application space. And so how do we get, what are we looking for? How to get in touch with us? How to find an idea that works? It's all wide open space here. So what we've done is Space Talent after a year in beta, we just officially launched it a couple of weeks ago. And on that platform, it's for job seekers and employers. We're a central node for 7,000 jobs in the space economy and 500 companies. But really interesting is that we have an open pitch opportunity. And what we've done is we've made a whole bunch of tools and platforms available to founders who want to sandbox with this type of data, play with this data, maybe come up with an idea for a company based on this space data that, then it's really, one click away, and we can fund that opportunity. So, I mean, the barriers are coming down all over the place, and there's a ton of opportunity opening up right in front of our eyes. We're literally watching the birth of location-based services equivalent in geospatial intelligence happening right now. And so the opportunities are infinite. It's more a matter of like pulling together the pieces and talking to the right people. And hopefully some of those people are on this call.
Fantastic. I had no idea that you had created that platform. I'm sure that so many people on this call are going to be logging in to find out more about it. It sounds like a great way for people to connect, especially in a disconnected world that we're in today. As I wrap up this kind of area of discussion, Anne, I'd love to hear your perspective. You're talking to VCs, but you've got plenty of entrepreneurs that knock on your door every day for funding. How should they think about it as they come in and potentially tap Silicon Valley Bank for money?
Yeah, so SVB, we provide venture debt financing in conjunction with the equity dollars that a company has raised. So typically a company might be a Series A company. Let's pretend that they've raised a $10 million round. They can expect to receive maybe 20 to 30% of additional financing in the form of debt on top of that last round. So it's a really great way for entrepreneurs to minimize dilution as they think about scaling the company. Can give them runway extension, give them some extra dry powder, or maybe want to accelerate their growth much more quickly than they had pitched to their investors. So it's a really good opportunity for entrepreneurs to, again, just have some additional access to our network as well, because the most common question that I receive is, okay, now that I have the money, I have, the clock is ticking. I have maybe 12 to 18 months left to perform. Now I need to think about fundraising for the next round. So can you help me think about who's the next class of investors who could be interested in our technology? What are our peers doing? What are our competitors doing? So, we don't share anything that, any trade secrets. We always have an NDA with our clients, but, we do have a lot of comps just to say, here's what other space companies have done. Here are the right KPIs in order to be successful for their next fundraise. Here are the customers that are interested in your space. We have contacts with the DoD, with the Air Force, all these different potential users of these technologies. So it's a really great way for, again, entrepreneurs to constantly be thinking about how to grow their business and scale much more quickly than anticipated. So many of the entrepreneurs that I see come from the defense, military, government backgrounds. And I think that they do need education to understand what sources of capital are really available to them and at what time.
Thanks, Anne. We've got some questions coming in, but I'm going to get to questions in a couple minutes. I'd love to just dig in a little bit farther on something that Alex brought up, which is kind of the public-private sector interest and the role of government. And we know last year, Trump administration established the U.S. Space Command, including Space Force, Space Operations Force, and Space Development Agency, and created the sixth branch of our military, the Space Force. So there certainly has been a big focus at the incremental level. I'd love to starting with you, Shaheen, I'd love to hear your thoughts on what is the role of government? Should they be doing more? Should they be doing less? What are the public-private partnerships? And how do we use them to really catalyze access to capital and interest?
So I think the role of government should be less one of picking winners and more one of being a customer to a large, kind of set of companies. So I would much rather see a government entity being a committed, to the point that was made earlier by Alex, being a committed long-term customer of these companies, or consumer of the product that these companies are generating, and then helping those companies gain credibility for other customers might be a little bit more, in the private sector, that might be a little bit more risk averse. So I think that's a huge role government can play. I don't think the government, for a company that is commercial ready, I would rather have those dollars be used towards purchasing products as opposed to just developing technology, which may not be the basis of an interesting business. So I sometimes see government dollars kind of distracting companies from what could be a good business, something that's not a good business, because the government dollars are available, and accessing those government dollars is via forms of private capital. So my advice to my companies is, hey, let's talk with the government, but let's get them to buy our products. Or if they want to pay us to do something, ask them to pay us to build something that we're already building as part of our core business. But if they're dangling money in front of us for something that would be a distraction from our core business, and would pay for a lot of our headcount and potentially reduce our burn, that's something that I would kind of hesitate taking.
Yes.
I'd love to then go back to Alex and dig in on this topic just a little deeper from his perspective, since obviously you're working with early stage companies, and Alex has has much larger companies in his portfolio at a different stage in their development. But I would think that some of the themes that you've talked about, Shaheen, are still evident with his companies. Alex?
I think Alex is on mute.
He was having trouble with his connection. So while he continues to try to connect, we can come back. Chad, do you have any thoughts here that you'd like to quickly share?
No, I think Shaheen did a great job answering that question. I mean, as long as this money can be great. I mean, money is great, especially for companies that are hurting, that need cash to build and grow. But if it's a distraction, then it's not doing you any favors if it's taking you off course. If it fits within your product roadmap and what you're actually trying to do to serve a commercial market, and it doesn't pull you away from that, then it can make sense. But you've got to be aware it's a slippery slope.
Good. Why don't I just quickly, I know we kicked off by talking about last year versus this year, but we're now in the last third of 2020. I'd love to hear perspectives on dollars being invested in the space, what people are interested in and excited about possibly for 2021, and maybe where their businesses are going. Chad, why don't you continue?
Yeah, sure. This is a fun one.
Yeah.
So we've hit on it a couple times already, but this has been a wild year. In the U.S., COVID hit really hard at the end of March, so at the end of Q1, and there was a lot of disruption and dislocation that happened through Q2. Interestingly, we did what everyone else does. Is we went back and we looked at our, let's hold on a second. Let's go and check in with all our portfolio companies, see how everyone's doing, see how this is affecting them. Turns out that our companies were in good shape, and they had they were good for cash. They had some good runway, but more than that, we were finding that a lot of these companies, especially those that are focused on space-based data, and particularly Earth observation or geospatial intelligence data, they were actually seeing an uptick in demand. And so we actually started having conversations about how do you now go and invest strategically and aggressively in areas where some of maybe your competition isn't able to, because they're pulling back and retrenching. So it's been really interesting. And actually, this is something that, my partner, Tom, and I talk about quite frequently, is that, in times of uncertainty, people look to the types of insights that satellite and space companies provide. And so since then, over the course of the quarter, we've heard anecdotes from CEOs at a lot of these Earth observation companies saying they're seeing thousands of % growth in their business because when the world becomes uncertain and dynamic as it is, people, and especially with people working remotely, this space-based data allows them to monitor their supply chains, understand economic changes in different areas. So I think, space is proving itself as a really valuable asset, and it's going to play, these different space-based data are going to play an increasingly important role in the post-COVID world. But also, like, one other thought on this is that also in Q2, there was a lot of people wanted to take shots and say that venture capital was all but dried up, and thanks venture capitalists for your last 7 to 9 years of participation in the space economy. It's been fun. But the fact of the matter is that didn't happen at all. In Q2, we saw a ton of investment actually in the application space, again, as people were moving remote and looking to take advantage of space-based technologies to enable that. And again, we've put out our Q2 report on investment in the sector, and so we're just looking at really preliminary data for Q3 because it's not over yet. But infrastructure came back in a major way in this quarter, and so that was an interesting story. There was less, infrastructure investment in the more capital-intensive, longer timeline type companies and business models, business plans. We did see some pullback on private investment into those areas. The government stepped up in a number of different areas and advanced money on contracts and did some other things to help bridge that gap. But the private investment came back in a major way in Q3, it looks like. So, and it looks like I said, 2020 could be a record year, bigger than anything we've seen so far. So, yeah, I think it's dynamic times. Every day is different, but it looks like 2020 has tested the resolve and proven the value of some of these space-based signals.
Anna, you're seeing the same thing across your client base, positive outcomes in 2020 and even more interest in for 2021?
Yeah, I am. I'm seeing the uptick in activity, although I think that we're going to see maybe less investment dollars scattered around what we saw in the past. So again, small launch, all the satellite companies, a lot of funds have already made some big bets, and we've seen a huge influx of interest from, Amazon, with Jeff Bezos, with Elon Musk, everybody starting their own in-house kind of projects to help support this area of focus. So as we think about manufacturing in space, collision avoidance with space debris, we're starting to see more interest there, but I think the dollar amounts might be lower right now just because people aren't really sure about the actual market opportunity. They know it will grow, but they don't know about the time horizon. So we're starting to see more seed funds, more early stage funds putting money here, not so much the growth investors. I think the growth rounds are really going to support those that have already shown massive progress, those like Relativity Space, those like Rocket Lab, who continue to be on the cusp of continuing to just repeat their business model.
As a finance guy, I'm not sure I really understand a lot of what you guys are all investing in. But I will say that one of the things I have always questioned on is all that stuff up there not banging into each other. So I think you touched on something that I think is one of the real themes for a lot of people when they think about it, that we put more and more of those things, more and more satellites and different kind of ships and everything into space and making sure that they're not banging into each other, or this, as you said, the space debris. Do you have one of those companies in your portfolio, Shaheen?
Actually, yes. We've looked at a handful of companies that are kind of servicing the space economy. So whether it's space debris, I mean, Relativity Space is our investment, where we're also kind of serving the fledgling space, small satellite space industry. I think for us, Relativity was very interesting because they've developed a new technology that would fundamentally impact the of putting payloads into orbit. That's what got us very interested. But we were still a little bit cautious as it relates to these second order opportunities. So tracking, or deorbiting older spacecraft, or tracking them, offering communications to them, ground stations like a Verizon for LEO satellites. I spent time probably back in 2014, shortly after I led our investments in Planet, looking at that because I knew the Planet was building its own infrastructure at the time. And it feels like it's still, I mean, other panelists might view otherwise, but it feels a little bit too early to be building companies that would be serving this nascent industry. But again, I could be wrong.
I had a feeling, though I will admit that I had not gone through all of your portfolio, that you would likely have a company that was doing something in that space, or at least something that would be focused on it, and because it's needed. So, Alex, yes, good to have you back. And I'd love to just touch on two areas. One is we talked a little bit about the topic that you and I were discussing earlier, which is the role of government. And I think Shaheen and Chad really, I think we lost Alex again. Sorry to everyone, but Alex is having some unstable internet issues, which is kind of part of COVID life, as we all know.
Bob, we've got a debris company in our portfolio. You want to talk about that?
Sure.
So we're not picking up the garbage yet. I don't like, to Shaheen's point, I don't think we're quite ready for that. But we've got so many things up there. I mean, we've gone from 1,000 satellites to now, plans to launch tens of thousands of satellites in a really short period of time. So we're going from a period where everyone knew everyone who was operating in space. It was like 3 sovereign nations and a couple of, private companies. But, suddenly we've got hundreds of new space agencies. We've got hundreds and 1,000 new space companies all launching things. Big players, Microsoft, Amazon, all the FAMCA companies are putting things in space or playing with it. So there's a lot of activity there. And we started to see insurance companies actually pull back because they had no good information on what was happening. And the risk was going up, and they didn't have any better information to be able to underwrite policies. And so we've got a company in our portfolio called Leo Labs that we've been involved with. The partners at our fund have been involved with since it spun out of Stanford Research Institute. And they are doing something for like 1,000th of the cost of the legacy providers. They're able to track 2-centimeter objects, whereas the incumbents are able to track 10-centimeter objects. And they can do it, for, instead of $1.5 billion for a radar, they can do it for $3 million and build it in 6 months. So they got some really interesting technology, and they're giving us the data to be able to track what's going on in orbit, and at least know where things are. Because, I mean, that's the first step, right? Is, okay, we got a lot of stuff going up. Where is it, and what's it doing, and what's the risk? And now let's figure out, some policies, and we can, create a public utility maybe to clean some things up. But at least now we've got the information. We're getting the information to allow the Commerce Department and others that are managing the space traffic to be able to figure that out.
That's fantastic. Well, it's good to let everyone know and hear some of the areas that you, Shaheen, and early stage investors are developing and helping to, which are necessary in space. It's not just putting something up there, but it's all of the infrastructure around it, and what happens once there are a lot of satellites and other projectiles in low Earth orbit. So, Alex, our Our topic this afternoon is investing in space, trends, opportunities, and risks. So I want to come back to you before we go to questions and say, okay, and this is the area that's near and dear to my heart, obviously, is what about exits? You know, what's your view on space sector ready for exits? And this year has been just an amazing year for a investment vehicle called SPACs. So do SPACs provide an opportunity for some of these companies to become public companies?
Yeah, so I absolutely do. Bob, can you hear me okay?
We can.
Excellent. Yeah, so I do present opportunity, and I'll explain my thinking there. I mean, you know, as a general matter, going public is hard as a company, you know, particularly via IPO, for a couple of reasons. You know, the equity markets are fickle, you know, and so it really depends on market conditions. A second reason is that, you know, as a company, you need a lot of infrastructure and people and systems to be able to, you know, handle the public and the other, you know, regulations and disclosure that come from being public in terms of, you know, access to an incredibly deep, you know, pool of capital, you know, liquidity for owners and management of their shares, all very important things. But there's obviously costs and expenses associated with that. You know, with the SPAC exit, you know, all those costs and the infrastructure that you need to go public, I mean, that's, you know, and if you're not, if you consider yourself ready for a SPAC, you know, that being said, as an asset class, there's a huge amount of activity, particularly this year. You know, one of the stats I was looking at before this panel was that, so in 2020 to date, there's been almost 100 SPACs, you know, that have been raised. And for those on the call who may be less familiar, SPACs are basically blank check companies, you know, that are raised, that raise capital, go public, and then within a year or two, they have to go find a target private company to merge with. So the 100 SPACs that I mentioned have been raised this year. They've raised more than $35 billion. That's more than half of all the capital that SPACs have raised in history of the asset class, you know, before 2020. So I think what that means is there's a lot of SPACs out there that are looking for targets. And I think, you know, space companies have a particular resonance with, you know, retail investors, you know, who make up investors of SPACs. So I think that's, you know, that's an interesting dynamic. You know, the other thing is because there are all these SPACs chasing deals, you know, I think the negotiating leverage has definitely swung back to the company owners, you know, as you think about being able to drive attractive terms. So, you know, Virgin Galactic was the first company to kind of carve a trail here. They went public via SPAC, I think, you know, almost a year ago, and they've, you know, it's been very interesting to see how they've traded. I think there are other mature space companies out there that probably would be a pretty good fit for a SPAC, and recent activities have made the prospect of an exit more likely. So, you know, I think it's absolutely a good thing for, you know, for the sector, particularly at the more later stage, more mature, you know, companies that might be looking, you know, for their next chapter in terms of their capital structure.
Okay, well, I'm going to stay with you. We're going to go to some questions from the audience as we're approaching only 8 minutes left in our panel. But from colleagues at NASA, when is it appropriate or necessary for the government to invest in advanced technology, and the advance is important to American industry, and where is it more appropriate for private investors carrying the technology to market? So I guess it's back to the public-private discussion we began having before on some advanced technologies.
Yeah, I mean, that's a great question. I think there are certain types of businesses or certain types of technology they're, probably too great, or it's too nascent for the amount of capital that would be needed to develop the technology to come in from a private source. And particularly certain verticals within space is very capital intensive. And in some areas where the addressable market or the commercial revenue potential is not very clear, and there's a lot of cost associated with overcoming, technical hurdles, I think providing that role to risk that investment, government, really, really important. So I think that's a critical area. And then I think there's certain types of activities, including, human exploration, deep space exploration, where, there isn't a clear, revenue model here in the near term, where the risks, are very high. And, those are areas I think where the government will obviously, always play a leading role, at least in the beginning, until the industry can mature behind the government.
Thanks. Chad, I think this one would be great for you. There's a question that says, do you believe that there's a business case for commercial space station, a business case where this commercial space station could close? And oops, so many questions coming in, I lost the balance of the question. And where, what can the ISS National Lab do to improve it?
Sure. So I do. I mean, there's certainly the interest, and we're starting to see the early signs of that. Suborbital activity, the investor interest in Virgin, the down payments people are putting down, the real money that they're putting down behind it, the seasoned Disney execs they're bringing on. All of these are pointing to, yes, people would like to go and experience it. We know, if you look at some of these business cases for travel into orbit, actually into space station, like they want to go somewhere, so you can go up in like a Dragon capsule, for example, and go around the Earth, and that's pretty cool, and people would pay for that. I mean, there's certainly a subset of people who would do that. More people would go and want to stay in some accommodations in orbit for like a few days, for a longer period of time. Some people would want to go to the moon. I mean, we know that people want to and are willing to pay for this because they've done it already. The bigger question is like how big it is, right? So how much revenue and how much cost? You've got three very different approaches to space stations. One is a really interesting old inflatable NASA technology. It's interesting. It's connected to the station. And it's doing some interesting things. I haven't really seen, and they've been progressing slowly over time. It's been great to see that technology develop, but that's kind of where it sits in my mind as a tech demo. Then you've got, an approach where you're essentially, building a station on the ground and launching it. That approach could be very expensive. It cost us $150 billion to do it that way the first time. And then you've got some other, kind of innovative ideas around reusing and repurposing upper stages and taking space hardware and refurbishing it, in which, low input cost in an uncertain environment kind of makes a lot of sense to me. Another one of our portfolio companies, NanoRacks, just shipped off their Bishop airlock. So, there's lots of services that happen on station other than just human spaceflight, right? There's lots of microgravity research, as this conference talks about. But there's also technology development, and there's also satellite deployment. And NanoRacks has deployed hundreds and hundreds of satellites, and they needed extra space, so they actually built their own airlock to be able to launch more satellites out of. And they launched a lot of Planet's early satellites in 2014. So it's really interesting. So the answer is that there's a lot of signals that point to yes. Some of these companies are taking deposits on future astronauts, and there's definitely demand there. How much is uncertain. There's definitely demand for satellite launch. There's definitely demand for pharmaceutical research and some other things, material science. So there's the right signals, and we're going to have to see where this goes. But it's going to be a balance of, upfront input cost and the ultimate revenue in the end. That we'll just have to wait and see, I think.
So I'm going to end the last question with a quick answer from Shaheen. Hopefully you're the right person to ask this to. When you raised the idea of working in the realm of space commerce with your colleagues, original raising with them, who had no prior experience in the space sector, what was their initial reaction to the idea of doing business in space? Not interested, curious, excited? And maybe just give us a sense of how that changed in 1 minute.
Sure. The emphasis was not on space. Space was completely secondary. The emphasis was on the people involved. In the case of Chimeta, it was a great technology that came out of intellectual ventures, and Bill Gates being a partner that wanted to go into that company with us. In the case of Planet, it was really Will and Robbie who came in and really impressed the partners. So I think space, it sounds great, sounds sexy, but I think you should really emphasize the team and the vision, and space is just a part of that.
Well, thank you. You wrapped it up as we hit 3 o'clock. I want to thank Chad and Ann and Alex and Shaheen all for joining me this afternoon and making this an easy hour for me. And really enjoyed being with all of you and with all of you sharing your experience and your space with all those that joined us this afternoon on investing. Thanks.
All right. Hey, Bob, thank you very much. And yes, all the panelists, thank you so much. A really great overview of the vision and the outlook of investment of the entire commercial space sector.